Welcome to this episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and I'm hopefully going to increase your financial IQ with today's episode. That is the goal. I want to talk about making bi-monthly mortgage payments, that strategy. So it's pretty simple. Let's talk about what it is. Instead of paying your mortgage every month, you make a 50% payment every 2 weeks. This results in an extra mortgage payment every year. What's really attractive about this is it's very easy, it's systematic, but yet it's purposeful and it has a tremendous impact. So again, instead of making your payment to your mortgage company every month, you break it into 2 payments, pay 50% every 2 weeks. That results every year in you making a 13th payment instead of the typical 12-month payment cycle. So using some rough math, this takes a 30-year mortgage if you did it immediately, and most of you that are listening probably didn't just get a 30-year mortgage yesterday. But if you do the rough math, a 30-year mortgage, if you did that consistently, paid every 2 weeks instead of once a month, you would reduce the 30-year term down to 23 years. You would shave 7 years off by simply doing this one easy strategy. So as an example, on a $300,000 30-year mortgage at 7%, which is pretty consistent with where mortgage rates are today. Again, this is just an illustration. A $300,000 mortgage, 30 years, 7% interest. That would reduce your interest cost, just the amount you're paying the bank in interest, from $418,000 plus dollars. That would be the interest cost if you just made the minimum payments every month for 30 years. You would drive that $418,000 interest cost all the way down to $312,000. That means you're not only reducing the term from 30 years to 23 years, but you're also saving some $106,000 of interest cost in this example. And that's a $300,000 mortgage. With today's real estate prices, many people have mortgages that are higher, but I just wanted to give you an illustration. So doing this, by the way, doing every 2 weeks instead of every month, in most instances, most people, most of the time, I don't think this strategy, although very impactful, would crowd out your ability to spend money, enjoy your life, handle other financial priorities like tackling other debt that you might have. It still should allow you to fund your retirement accounts, maybe build college funds, have an emergency fund. It shouldn't crowd out all other priorities. You should be able to work this in to an overall plan, but it's simple, it's easy, it's systematic, as I said before. It's very purposeful because you're going to set out on this plan, but it's going to make a great impact. So if you have a mortgage, whether it's 30 years, 15 years, whether you just had it or you had it a while, if you have a notion that you'd like to pay down the debt faster, but you don't want to do anything too extreme, please consider working this into your plan. It can be very effective. So thanks for listening to today's brief, but hopefully informative episode of the Simply Financial Podcast. I'll be back with you on the next episode very soon. In the meanwhile, please subscribe to the Simply Financial Podcast if you haven't done so already, and tell a friend or family member about it. I'd really appreciate that. Thanks for listening today.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.